It's about that time of day again here, boys and girls. Welcome back, welcome back. Joseph James, School of Trade, SidewaysMarkets.com. Welcome back to our nightly newsletter. Today is the 24th day of the 6th month of the year 2014. Are we enjoying this, guys and gals? Are we enjoying this? I hope so. You're right. It doesn't make any sense, and I love every minute of it, right? It doesn't need to make any sense. That's the best part about being a trader. I love reading the headlines here. Equities collapse. I call it a pullback, right? It's just great. What a great life being a trader is. It feels like the rest of the world is looking through the lens, right, of a different person, right? We get a chance to see the world for what it really is. Boy, got an exciting newsletter for you guys this evening. As you can tell in my voice here, I am all amped up here this evening. What a great day we had in our trade room. This afternoon had some huge moves this afternoon. Just a great Tuesday overall. Those narrow ranges yesterday gave us some great ranges to work with today. Let's see here. We got three things to talk about today. First of all, what happened today? Second, we'll take a look at the news for tomorrow. And third, we're going to grab those charts. We're going to roll up them sleeves and get ready for whatever the market throws at us for tomorrow. By the end of this newsletter this evening, you're going to know exactly what happened today, and you're going to be prepared for the news tomorrow, and you will be prepared with strategies for no matter what this market throws at you, whether it goes up, down, sideways, or if it goes all the way to Pluto. We'll see what happens tomorrow. You will be ready for it. Now, before we jump into it here this evening, I want to remind you guys, get over to SidewaysMarkets.com. If you're not watching this video right now on our trading blog, there will be a link below the video on our YouTube page. Make sure you follow that link. Get over to SidewaysMarkets.com for three specific reasons. Reason number one, right below the video, there is a link here to download all of my charts for today. You'd be a fool not to take me up on this offer, guys. Download those charts. I spend quite a bit of time every evening making sure that I'm ready for tomorrow. If you're a student with me, bring those charts with you to tomorrow's trade room session. It opens up at 8 a.m. If you're not a student, well, you've got yourself some very high potent levels. And I'm going to show you guys how to use those for tomorrow. Moving forward, the second thing I want you to do in the upper left-hand corner here is register for our free pass. You might be asking yourself, this guy JJ, is he kind of a weirdo, right? He gets a little excited on these videos he does, right? But how does he actually make money with this stuff, right? You can see this all works, right? I mean, unless you happen to, right, unless you're blind, you can see this stuff works very well. But how do I profit from it? How do I keep it simple? How do I teach this stuff in real time? I'm one of the only traders on the planet that teaches and trades in real time. It's a pretty tough job. I want to show you how simple I make it and how easy it's going to be for you to follow along and learn and earn with me in the trade room. Take me up on that free pass, upper left-hand corner. You will not be disappointed. Last but not least, follow down the lower left-hand corner right above my ugly mug. I've got a list of an email list here for my nightly newsletter. I want to make sure that you don't have to wait around for the blog to get updated. You don't need to check the YouTube page. You can simply give me your name and your email address, and I will send you a copy of my newsletter every evening around 8 p.m. Eastern Time. All right? So three things. Download today's charts by clicking the link below the video here. Second thing, register for your free pass, upper left-hand corner. And third, the nightly newsletter mailing list in the lower left-hand corner. Now you know the deal here, boys and girls. All right. Also, don't forget, we've got somebody standing by here 24/7 for you if you ever need any help along the way. All righty. Gold grinds higher. Russell goes up and then collapses, but I call it a pullback. We'll see what it looks like to you. And crude. Boy, crude oil was balanced at 106 as of closing bell today, but don't you count those buyers out, boy. They got some airstrikes in Ukraine. We've had a lot of reports today. We got crude jumping higher right now. So this chart is a little bit, I don't want to say worthless right now, but when I show you guys the next chart, you're going to see exactly what I'm talking about. First of all, what happened to the black gold, the Texas tea? What happened to the crude oil futures today? 75 ticks of range, still had a relatively narrow range, but keep in mind, this thing went up, it went down, and then as of right now, we are all the way back up to 107 again. I know, it's craziness out there. We get a lot going on with crude, right? We got all the shenanigans happening in Ukraine. We have this kind of question mark about Iraq. I just read a headline today that said Obama just paved the way to allow exports of U.S. crude oil. This is a law that's been intact for 45 years. Guys, we have so many incredible geopolitical different laws that are now being passed or laws that are being abolished right now. It's a great environment to be a day trader right now. There's definitely no shortage of opportunities. So now we finished the session. Let's talk about this for a second. Because as of right now in the overnight session, we are right about at that 107 right now. I'm going to show you guys that in a second. But look what happened. Very narrow range in the U.S. We closed right at 106. We pretty much closed right where we opened up, right? I mean, pretty much the same price we opened up. But it was just a field day going higher, right, going lower. We saw both those opportunities in the trade room today. Great money-making opportunities in the trade room. But look, as far as the U.S. traders are concerned, we are pretty darn balanced. Open in the middle, closing in the middle, volume in the middle. Now, I've been saying 106 for the past week or so, and that's pretty much where we keep ending in the U.S. session. But here we are, though, again, pushing higher here. Stick around here in a moment, guys. I'm going to give you guys some strategies here on how to profit from crude because we finished the day today at 230. Remember, this is what you'll call a gap chart, which means that closing price right there, right, that is at 14:30 military time, right, or of course 2:30 p.m. Eastern time when the pit closes here in the U.S., right, in New York City. So we know we had a balanced session today in the U.S., but something just got this market going higher here. Hold on tight. We'll be back to take a look at that in just a moment. Moving on, though, here on the Rusty, boy, what an exciting day to be an E-mini trader. I mean, if you missed the move up here this morning, just hold on tight because it was coming right back down again. Absolutely. Like I said, it's a great time to be a day trader right now. I feel bad for those poor saps that have to predict this thing 96 hours in advance, right? I mean, gosh, could you imagine being a hedge fund manager with client redemptions at all times and these crazy moves? I'll tell you, being an intraday trader right now is... well, it's the only way that I want to trade. I'll tell you that much. Trying to tell where things are going besides, up in the long run in the equities right now. If you're intraday trading, you got great ranges. You got some great exciting volatility right now. So definitely a great time to be a day trader. As you can see, though, we poked our head here out. Very interesting today. We opened at the low. We go higher. We try to stay above that prior high of day, stay above the prior week high, stay above the prior week close. Not so fast. We poke our head out, and then look out below, collapse all the way down, 225 ticks off that high. We close the session below the prior week high. We close the session below the prior week close. But here's the big clue here. Volume is all the way down at those lows. Now, there was some dramatic volume here because in the trade room this morning, we bought this thing all the way up, right? So we, of course, once lunchtime came around, literally all the volume was at the end of the morning. Look, more volume than we saw in the beginning, more volume in the middle of the day. It all piled up towards the end. Now, that tells me, since we opened up at the lows, that's bearish. We closed at the lows. That's bearish. Volume at the lows, that's bearish. So I'm going to go out on a limb here and say that by the end of the session today, we were bearish. We were in complete control by the sellers. Remember, not very often do we see price closing at the lows and the volume at the lows, right? We oftentimes see price close at the lows, but the volume tells a story. This clearly tells us right now here that traders not only got short, but they didn't take their profit. Right? They did not take that profit. They didn't get out of these shorts here. So they're clearly holding on to something. I like the idea of testing this prior week low, 55.2, 51.4. But I've got reason to believe, though, what this felt like to me, if you want to know my personal opinion. Now, I don't predict, I react. So this is just for fun. But what this felt like to me is it felt like the big money buyers out there just let this thing collapse. You've been listening to me for the past week talk about a deep pullback, right? We've been waiting for a deep pullback. This just doesn't happen like that very often, right? Where you get that straight line down, all the volumes down at the low. What this tells me, and again, just kind of a whiff of this, right? It tells me that this might be that pullback we're waiting for. All the smart money here waiting to buy this low and return it back up. I mean, heck, we got great news today out of the U.S. We had 2 back-to-back days. Monday had great news in the U.S. Tuesday had great news in the U.S. There's really no reason for this to be pulling off those highs except for the fact that the big money, the smart money, I should say, right, like you and I, right, we of course are very intelligent because we don't buy at premiums. We wait to buy at discounts. So hold on for a second here. We're definitely looking bearish into the close today on the E-mini Russell, right, and most of the other E-minis as well. But I've got a little bit of a plan here for seeing those smart money buyers stepping in possibly tomorrow morning, right, or Thursday. We'll wait and see that for a second. Stick around with me here, and I'll show you my plan here for tomorrow in the Russell. And then last but not least, and then we go to gold. Gold, somebody needs to put a foot in your rear end and get you to move. Now, when we look at this chart, 75 ticks on gold, yuck. Very narrow range. We're still grinding higher, as you can see. We're right around that prior week high. And guys and gals, when you see the price stuck in the mud around the prior week high, you know that tells you the buyers are here, but they're just not confident right now. Think about it, right? If the buyers weren't confident, this would have collapsed off those prior week highs a long time ago. So clearly all the geopolitical mess that's happening out there right now has people on the buy side, but you can definitely tell, though, if they're bullish, they're really not that bullish. What this feels like right now is there's a lack of anything. You'll see here we have a big gap up, right? That tells me we're bullish overnight. We had 150 ticks of range in London. It was a big active range in London from 3 a.m. till 7 a.m. We step in, and then the record just stops, right? And we just go, well, never mind. And we sit there. 75 ticks of range in the U.S. session. Again, but the majority of the move happened in the London session. We opened at the highs, but we closed back in the middle, volume back in the middle. It's definitely sideways with just a little dash of bullishness. Again, what this feels like right now is that everybody's defaulting to being scared. Right? Well, I don't know what's going to go on, so I'll just be scared. As if everybody in the world is a pessimist. Obviously, that feels like that could be the case right now. There's no real threat. There's no real reason. Yeah, we got some little issues in Iraq. Yeah, we got the shenanigans in Ukraine. Yeah, we're worried about the emerging markets, right, and the global slowdown. But come on. We've got multiple days, multiple weeks back-to-back in the U.S. of very good news. We have had some mixed numbers out of London. Yeah, okay, I can make an excuse for this. But, I think the marketplace has to pull up and, don't do this the wrong way, pull up the collective skirts here and get on with things. All right? Everybody's listening to the news media way too much right now. You can tell, right? You can tell. Nobody's ready to back off that edge yet. But remember that term time decay. The longer we get away from that crisis, right, that seems to rock the newspapers every other day, the longer we get away from that, the more people will back off the edge. So gold, be ready, but also be patient here because we're not getting those big ranges right now on gold. So be disciplined to follow your plan. Let's not go too crazy there trying to force those big moves on gold right now until we see some better personality. Now that we're done with what happened today, nice big healthy range on Russell, crude oil balanced in the U.S., but now running higher here right now, and gold, looking like a little pussycat here today. What's on schedule for tomorrow? We have no major news in Asia overnight. No major news overnight. We then roll over into Wednesday, June 25th. Now, the first thing you should be thinking about for a Wednesday is crude oil inventories. Absolutely. Now, next week's inventory will be a little bit off, I believe, because you got 4th of July holiday next week. We'll talk about that next week. But the reality is, though, no major news overnight. We got some minor news here out of France, minor news here out of Italia. We got minor news here out of Great Britain. The big red star news is going to be in 8:30 tomorrow morning in the U.S. I got durable goods and I got GDP. Now, remember, GDP is that big scary news event. See, GDP, you would think, is just as important as non-farm payrolls or FOMC, but it's not. All right? GDP is all show and no go. It's got very little impact. In fact, the durable goods orders will probably be a bigger impact player tomorrow morning at 8:30 a.m. I would think so, unless I'm wrong. But usually GDP is something that so many analysts are watching that by the time we get to it, the market's already priced it in and we don't really get much of a reaction. So thank goodness for the durable goods orders tomorrow. And let me remind you, if you've been living under a rock the past few months, manufacturing is back, okay? We've seen some incredible manufacturing reports over the past few weeks. Remember, at the beginning of 2014, manufacturing, retail sales, right, housing, all got slaughtered. Mother Nature took the whipping stick, right, basically to all of our numbers in the early part of 2014. Now we got the housing market back on track. Today we saw an awesome new home sales. It was like 18% month to month. That was back to back. Existing home sales beat expectations. New home sales beat expectations. Guys, remember, the housing market is a lagging indicator of consumer confidence, wages, jobs, right? You can't buy a home without a job, right? So, well, at least last time I checked, you couldn't. Maybe I'm wrong. Let me know about that. So we have, again, no major news tonight. We jump all the way down to 8:30 tomorrow morning. 8:30 a.m., durable goods orders, manufacturing, right? Manufacturing. Housing's back, right? Jobs are back. Retail sales are back. Manufacturing report coming out tomorrow morning at 8:30. That's going to be an exciting report to watch. We'll be watching that live in our trade room tomorrow morning at 8:30 a.m. All righty? Last but not least, do not forget about the crude. We got inventories tomorrow at 10:30 a.m. Like I said before, Wednesday morning. When I say Wednesday, you should be thinking crude inventories. Remember, tomorrow morning we're trading crude, sitting on hands 15 minutes before, at least 10 minutes after. If you see crude slopping around before 10:30 a.m., you know why. All right? Remember, we got inventories tomorrow at 10:30. So don't force it tomorrow on crude before that 10:30 inventory number comes out. Very, very important. We don't want to dig ourselves into a hole tomorrow morning just because we're ignorant to the fact that we're waiting on inventories. All right? This evening we got the API number from the API. We got, of course, I think it was 4 million, one of the largest builds in a while. So we did get a bearish number out of the API number tonight at 4:30. But we'll have to wait and see what the news report comes out tomorrow. And lately, all eyes have really been on this whole situation, Ukraine and Iraq. So we'll see how that plays out tomorrow. The key for tomorrow, though, is be patient on crude until after 10:30 a.m. Be ready, though, for those fireworks to go off at 8:30 a.m. tomorrow morning. All right, so 8:30 and 10:30, those are your important news numbers. Again, you got some minor stuff coming out of Italy, France, Great Britain, and Europe, but I don't think you're going to see much action off of that. That's the news for tomorrow. Be careful on crude, all right? Be careful on crude. Now that we know the scenario of what happened today, and now that we are prepared for tomorrow's news, here we go. If you're wondering why gold, right? Here's my gold, that funny yellow metal. If you're wondering why gold can't seem to get itself out of first gear right now, well, this is why. You've got this trend line coming in overhead. You've got overhead resistance. So while the rest of the world is wondering, I wonder why gold's not moving right now. Well, again, like I said before, it feels like everybody's just a little bit scared. Scared of what? I'm not quite sure. Maybe they're scared of the dark, the boogeyman, right? Something like that. I have no idea what they're scared of right now. All right, probably too much news media. But we can see why, though, we haven't fallen off these highs, right? I've been talking about this for a week and a half now. I'm waiting to get short here on the gold. All right, so all I need here is to watch these buyers start to, right, to decay after the time elapses, right, from the last major crisis. So we're looking for bearish moves here on gold right now, but those buyers are not giving up. You can see here they continue to push higher. Here's another look here at the gold market on a different type of chart now. And you can see here where we have that trend line. We can see pretty much the same stuff here, right, that we're dealing with right now. Again, we're grinding higher, but we're running right into major resistance. Don't forget, you can download all of these charts on the blog. Last but not least, here's the faster of the 3 time frames, and this is now going to give me some opportunities here to start following this trend. So here's what I'm going to do. In order to be ready for anything tomorrow, what if price goes higher? What if price goes lower? What if price goes sideways, right? A professional trader says, I do not predict. In fact, I don't even care what direction it goes. I make money up, down, sideways. It's all the same to me. So if it's okay with you, I'm not going to worry about anything else besides being ready for all 3 directions. What if price goes sideways? If price goes sideways, I'm sitting on hands. What if price goes lower? Price goes lower, I'm looking to buy the 1311.3, 1309.3. If price keeps going lower, I'm buying the 1307.1. If price continues, once I get below 1307.1, then I have the ability to start selling short. I've got a great target, a symmetrical target at 1300 for the short, 1290.2 and 1284.2. So as price goes lower, I'm buying the 1311.3, the 1309.3. I'm buying the 1307.1. Once we get below that 1307.1, I've got the chance now to start selling. My targets below me are 1300, 1290.2, and then if and when we get to any of these targets, I will then begin to look for buying opportunities right shortly thereafter. That's what I'm doing if price goes lower. If price goes sideways, I sit on hands. If price goes higher, you can see we just recently made a new higher high, so I am given a green light right now to be buying pullbacks. I'm above all the key moving averages. I have no major resistance in my way unless, of course, you talk about the top of this channel and the top of this range. If I get long here, again, I am free to buy right now on gold. My targets overhead are going to be the top of this channel and, of course, the 35.4. If you need more targets, go out to my 89. If you need more targets, the next target will be above here at 1361.2. Right? That will be your next target. So targets above at 35.4 and 1361.2. All right? That's your gold for tomorrow. Looking bullish, but again, I'm not going to predict. I'll react. I get a green light here to be a buyer on gold right now, as long as I start seeing new higher highs. If I collapse and go lower here, I will start selling short below 1307.1, and there you go. Now you know what the plan is for gold. Let's keep on moving here. Now, if you picked up a newspaper today, you would probably read a headline about the equity markets getting slaughtered here today, right? But it looks to me like this is not, right? This is not a killing of the buyers, so to speak. This appears to be nothing more than a pullback. We've been talking about this in the Russell for weeks now. We had this new higher high. Right? And all we need to do every time it makes a higher high is wait for the pullback. Wait for the pullback. This is nothing new. Okay? The difference between a professional trader and a rookie, a retail trader, a trader who donates to the market is the ability to keep our emotions under control, the ability for us to wait patiently to buy at a discount or to sell at a premium. Right now, we are pulling back on the Russell right now into that buy zone of 1168.4. 1163.4. I have 1160, and 1156. We got plenty of reason to think here this is nothing more than a deep pullback here on the Russell. So as we move forward now, we look at our faster anchor charts, you can see right here. Now, a little bit surprised that we didn't get this first move to go up to our target at 95.6. But now we're getting another shot. Now we're getting another swing at this thing. As you can see right now here, all I need is to see this price now start to push higher. Once it starts pushing higher again, I'll be right back to the races looking to buy once again. I'm right inside my buy zone right now, 67.8, 62.6. I've got symmetry support at 59, slightly adjusted from yesterday. I've got 55.3, 50.4, right? Those are the easy ones. Once and if and when I get below this 41.2, that's when I can start looking to sell short here. Right now on the good old E-mini Russell, the mighty Rusty as we call it in our trade room, we have pulled back here into a buy zone. Now, here's the next chart is very, very important because now we're going to start seeing where we can really start to get either long or short. Now, here's a really tough scenario here. You know why? Because we're making new lower lows. You can see we're now above the long-term moving averages, but below the short-term moving averages. So what is a trader to do? I may not feel like we're bullish right now, right? We're bearish. It's a deep, deep pullback. So in all reality, what we have to do is we have to wait for this to consolidate, find some support, and then start making its move higher again before we can feel confident buying this thing. If you're in my trade room, I would say this is a transitional area. The buyers have slipped up a little bit. We got some lower lows in price. But again, that big short here off the highs, what it honestly feels like is, it feels like the rookies and the retail traders got a chance to take some profit today, and there was nobody in their way to stop them. That's what it feels like. It doesn't feel like the big money was participating on this because it would have consolidated at that high. It wouldn't have reversed that quickly off that high, right? If it was big money in this move, it would have gone up to the high, it would have consolidated here for a while, and then right when you least expected it, it would have dumped, right? That didn't happen. It literally went up, it spent a few moments there, and then just as fast as it went up, it collapsed right back down. So now we know what I'll be looking for here is for price to start to hold these lows. Give me some consolidation here, and then get us building on that going higher. Okay, so that's going to be the plan if you want to be a buyer. You can see we're right inside that zone right now, 68.4 to 63.4. So this could keep going lower a little bit more. Once I get below 62.7, now it's time to look out. All right, if and when I get below 62.7, now it's time to look out. Why do I say that? Because then I'm going to be below both of my long-term and short-term moving averages. Okay, very big deal. Right now, the short-term slipped a little bit, but the long-term buyers are still going to be here to grab hold. Now, here's what I would look for if you want to get aggressive selling short. Okay, if you want to get aggressive selling short, here's what I would look for. I would look for price to try to make a move higher. Get around this 74 area. And then if it collapses, now you know you got those sellers in charge. Okay? So let's play that scenario. What if it goes long, short, or sideways? If it goes sideways right here, I'm sitting on hands. Be very careful. You're right next to our BMT, 1166.1, something like that. So if it goes sideways here, be careful. All right? I'm sitting on hands if it goes sideways. If it goes higher here, okay, this is going to be the tough part. And we've seen this happen a few times in my trade room the past few weeks. If it goes higher here, 1174 is my line in the sand. What I'm expecting to see is, I'm expecting if it goes higher and keeps on going, perfect. Then we know, wait for a pullback and we'll buy it going higher again. Okay, again, deep pullback, this move lower, not a reversal, it's just a pullback. But if we try to go higher here and we run into 74, and then we try and we fail. If that happens and it fails, that is your ticket to sell short right there. That will tell you the buyers responded, but they couldn't quite keep the mojo flowing, right? And they, of course, collapsed. So 74 right now is really my line in the sand. All right, it's really my line in the sand here. If I do start seeing it rise right away, absolutely, I am in a buy zone right now, so I can definitely buy this right now. But just be aware, though, 74 even is going to be resistance, and I wouldn't be surprised if we buy it up and then it keeps pushing lower from there. All right, so that's your signal to get short if that happens. What I love to see happen is to see this thing get above 74 and then, of course, keep on going. We'll be back to buying again. Okay, so 74 really is a big variable. It's a big line in the sand here for you, if you will. All right. So we know here if price goes higher, what to be looking for, right? Look for price to collapse if it can't get above 74. If it gets above 74, then we know we're back at the buy side. This is just a small pullback, right, in the bigger picture upward trend. Price goes sideways, I'm sitting on hands. What if price goes lower? If price goes lower, we're not out of the woods here until we get below 62.7. Get below 62.7, then we're selling off here down to 56 and 52.47. And of course, come in tomorrow morning, see me in the trade room tomorrow morning, and I'll give you some real-time updates on what I'm seeing tomorrow morning at that time. Alrighty? So now you know my plan for the Russell. Again, guys, this has disaster written all over it if you try to force this stuff tomorrow. This area right here is going to be a transitional area. Get below it, and I'm good to go short. Get above it, and I'm good to go long. All right, but inside this area right here between 74 and 62.7, we really got to be on our best behavior because the sellers are here, but the buyers, don't count those buyers out just yet. Remember, on the daily chart, we've just pulled back far enough to get into a nice buy zone. Moving forward here, moving forward. Now, what a crazy session on crude. Yeah, I heard there's something out there in Iraq and Ukraine right now. Yeah, just a little. And it was about 15 minutes ago. Well, I've been on this video for 30 minutes. So let's say 45 minutes ago, I'm reading a news headline out of the White House talking about how Obama just paved the way to basically make it legal for people in the United States to export oil overseas. How the times have turned, right? How the times have turned. Could you imagine the U.S. exporting? If you want my personal opinion, I think Odrama there should just release the strategic reserves, flood this market full of crude, drop those prices for the summertime, win the admiration of everybody in the country, set this economy on fire. And I'll tell you right now, if that was to happen, Putin would have to do a lot more than take off his shirt, okay, to make that problem go away. That would put a world of hurt on the Middle East. All right? But you know, it's not as simple as that, right? The relationships that we have with the Middle East, most of us don't even know all of it, right? And we probably never will. It's what makes us the general public, right? If I can quote a very popular movie with Michael Douglas in it. Okay, so of course, here looking at crude on my daily chart. I mean, literally, this is today's candlestick. If you look closely, today's candle is a full expansion candle. We got higher highs and lower lows. How does that happen? Yeah, that happens when you see an expansion candle that gives you higher highs and lower lows. You know something crazy is going on out there, and people are all over the place. All right? Again, binging on the news media, indulging on the fear-mongering, if you will, right? Turn off the television set, boys and girls, and back away from the barrels of crude. It's going to be okay. We got our daily chart on crude looking yuck, right? As you can see here, we got big buy zones here, 104.28, 102.46. We're stuck right in the mud here at this sell zone, and I got plenty of levels here overhead for you guys to use as targets. 108.22 would be the next target overhead if this thing does keep pushing higher. I'll bet we come right back to 106, though, for tomorrow morning, all right? Quote me on that. let's keep moving. We move from the daily chart over to the 89 JJ anchor here, and you can see this just sideways range. We got 107.50 pretty much at the high, 105 at the low. We have about a $2 sideways range here on crude. Sounds good to me. It doesn't make much sense. Well, I guess it does. I mean, you got people that are worried about Ukraine, worried about Iraq. You got all these people that are worried about everything. I'm not sure why they're so worried about everything. There's absolutely no risk of supply of crude oil. Yeah, newsflash. Supply of crude is fine. There's no issues there, right? We know as traders that perception is everything. Reality is worthless, okay? There is no problem with supply of crude. Tell that to the buyers right now, right? Tell that to mom and pop trader out there who are busy stockpiling barrels of crude oil right now in their basement because they watch too much television. Okay, like I said, put down the bottle, put down the remote control, and come back to real life here, right? So there's no worries about supply. But again, all the fear-mongering continues to push this price higher. Especially, we just got a huge inventory report this evening, and we just heard from Odrama that he's going to be putting together the plan to allow us to export crude. What part of that is bullish? I know, right? I don't know. I don't make the rules, boys and girls. I just show up to dance. Okay? So, 107.47 resistance overhead. We're running right back into it. I've got 109.17 overhead. That's another target for us. Don't forget, you get the top of that channel. Now, this channel, believe it or not, goes way back. This channel goes way back. I mean, it goes all the way back here. What's that date? January, right? This channel higher goes all the way back to January. I'm not making this stuff up, boys and girls. You can see for yourself. Download the charts yourself. So we've got this top of that channel going to keep banging our head against the wall. If you're a member of mine, you've probably heard me say this way too many times by now. Where is the most dangerous place to buy? At the top of a bull channel. Where's the most difficult part to sell? At the bottom of a bear channel, right? Looks like this. I got my bull channel. The setup looks, I want to buy at those lows. Right? I want to buy at those lows. I want to buy near the lows. And I want to stay the heck away from the high there. What's happening right now is we're getting this crude price banging its head against that high here. It's a very difficult area to trade with. On the opposite side, you get a bearish, right? You get the bear channel. On a bear channel, same thing. I want to sell at the high, and we know it gets nasty, right, down near the low, right? So Mama says, sell the high of a bear channel, buy the low of a bull channel. But she also says, do not try to force those trades long at the top of a bull channel. Do not try to force those trades short at the bottom of a bear channel. And here we are. What I would love to get is a pullback. I'll tell you, if I can get this price to pull back a little bit, I would be all over this to the buy side. But right now, it's very difficult to justify buying. You're buying at a premium. Now, if I had a crystal ball that said tomorrow morning there are going to be missile strikes in Iran, yeah, sure. Okay, I'll be a buyer at the highs. But you cannot make a strategy out of buying the high. Not at least if you want to make any money. All right? Last but not least, you're on crude. Like I said, we finished the session today. We finished the day right here. We jumped right up here overnight. Right? Overnight, of course, being anytime after 2:30 p.m. Eastern Time when the pit closes. You'll notice here I drew in a channel, right? Trying to make some sense of this thing right now, right? Got a channel going in here from high to high. So we definitely see here some opportunities to buy. We just barely got that. Is that a higher high? I don't think that's a higher high. I got 50. Yeah, that was, wow, a one tick higher high. So one tick higher high tells us buyers are initiating the move. I'm looking to buy this 106.38, buy this 105.73. So right now the buyers push to a new higher high. I want to wait for price to pull back so I can buy it. I've got targets here for you overhead. I've got 107.61, 108.25, and 109.07 on the buy side here for you. All right, so use those as your targets overhead. And again, I'm going to remind you, we're going to keep banging our head against this wall because where are we? At the top of that bull channel. Don't forget about the big picture, guys. Don't be foolish and forget about the big picture. The big picture is the most important picture. This is just the entry points. Now, what if we collapse? But there's no way we'll collapse. Look, we're bullish. Oh, really? There's no way? Come on. We know better than that, right? The word no way should not even exist in a trader's vocabulary. Anybody who saw the whole credit crunch, 2007, 2008, 2009, if you traded through the whole debacle in the U.S., the whole global meltdown, you have a very hard time saying no way. All right? Never, no way, can't happen. Those words don't exist in our vocabulary anymore. So if and when we go lower, I'm looking to buy the 106.38. I'm looking to buy the 105.73. I will buy the 104.56. But once I get below this 104.56, all right, then I've got that green light to start looking for a short. Right now, it's tough to say we're looking for shorts right now. I know it is. So we'll definitely be looking for buys here on the pullbacks right now. I want to buy at a discount. I want to sell at a premium. And you got your targets waiting for you overhead. All right, guys and gals, now you know the plan for tomorrow. Don't forget to get over to sidewaysmarkets.com. Don't forget to register for your free pass. Download all the charts. Be ready with me tomorrow morning. Join our nightly newsletter. And while you're here, take a little stroll over to SchoolOfTrade.com. You know, boys and girls, we just celebrated our 10-year anniversary. We've been teaching and trading on the web for over 10 years now. Pretty incredible. We are the longest running trading education website on the web. Don't take my word for it. Look around. You'll see exactly what I'm talking about. We have a great free trial. That free trial, you're going to learn more in the free trial than you're going to learn anywhere else on the web, whether you pay for it or not. Ours is free. We offer 3 levels of membership: beginner, intermediate, and advanced. And guys, we built School of Trade over 10 years ago because we were sick and tired of the junk that was out there. We wanted some place that was a professional grade, the Harvard of trading education. We wanted to be different. We wanted to be the very best that money can buy. At SchoolOfTrade.com, we do right by our clients, and I look forward to earning your trust, earning your membership as well. So give me a shot, join the free trial, give me a call here in the office, take me up on the free pass, come out and see me tomorrow afternoon or tomorrow morning in the trade room, and I'll show you in real time what we're all about. I want to thank you so much for joining me here this evening. Don't forget to share this information with a friend. Don't hog all the good stuff to yourself, and come back and see me tomorrow morning, 8 a.m. Eastern Time. We open that trade room, 8 p.m. Eastern Time. We'll see you back for the nightly newsletter. Joseph James here, School of Trade, Sideways Markets. We'll see you guys next time. Adios, amigos. Bye-bye for now.